Hi everyone, and thanks for tuning in to another episode of Budget Investing. So today I have a couple things that I want to go over with you. The first one being, what is the best stock or stocks to be buying right now while the market seems to be crashing, and how I'm positioning myself to be successful in the long term, as I do want to make sure that I'm having that big picture view. So first, I want to give you a little bit of context into why my strategy is going to work for me. So stay tuned to the end of the episode to see which 3 stocks that I'm buying right now that are going to help me to continue to grow my money. So obviously it comes as no surprise to anyone who's following the stock market that things have been pretty rough over the last 6 months. The S&P 500 is down 14% in the last 6 months, and just since March 29th, we're down 13.83% or 640 points. So things have been pretty rough. But I want to try to take a bigger view at the stock market right now. So zooming out to as far as Google will let me, you can obviously see that the stock market in the long term tends to always go up. Yes, there's going to be downs where, you drop 40%, but then you go back up, 70%, down and up and so on and so forth. But my plan is going to be to stay in this long term. This drop that we're currently experiencing, especially over these last couple of months, is really, for me, a buying opportunity to dollar cost average down the stocks that I own so that in the long run, I'm going to be even more profitable by having to put in even less money. So I found a great comparison that I saw online on Reddit of the 2008 market crash, which is this chart that you see here on the right-hand side. And obviously, big drop, and then we went back up, and then another big drop. And on the left-hand side, you can see that's the exact same pattern that we're following. But even if we don't continue to follow that pattern, we obviously had a huge boom in the economy after 2008. So it goes to show that if you can just stick with it, continue to add money in as the prices go down, in the long run, you will make more money. So you just have to be patient and really just ride this wave out. So how am I determining what is the best stock right now to buy? Simple, I'm looking at the S&P 500, which has a great broad view of what's going on in the economy. And right now the PE ratio for the S&P 500 is around 20.8. Obviously it's going to fluctuate day to day and continue to drop down as the prices continue to drop. But if we look back not too long ago, obviously we were around 25, and we've had some obvious huge jumps here and there over the last little while. But right now, the average price is around 20 PE, so any stocks that are below that are going to be in a position that are undervalued in comparison to the rest of the market. So if you followed my previous advice, you should already be tracking the PE of your entire portfolio. So it's really easy to kind of jump in, filter out any stocks that have PE ratios that are above 20, and you can start to already create a list to add into your current positions to make more money in the long term. So this is my list of stocks that I currently own today that I feel that are undervalued just by strictly looking at the PE side of things. So obviously I have a lot that are in the finance sector. I have ATD and I also have Stella Jones. So that gives me a little bit of options. I can continue to add to these positions, or I can look broader outside of just my portfolio alone to see if maybe there's a great buying opportunity for myself. Obviously, I don't want to have too many stocks, so I'm going to be looking to add to current positions versus adding brand new ones. So the first stock that I want to recommend, because it is a extremely undervalued company right now, is Equitable Group. Their PE ratio is down at 6 when the whole total market is hovering around 20. If you look at their earnings, you can see that they've consistently been beating, and they drastically beat back in Q3 of 2021. High level overview, you can see that their financials are looking really good as their revenue increases, their actual earnings has been increasing, and it's a dividend growth company, which is paying me bigger and growing dividends every year. Even when I go down to the analysis target range, you can see that they're averaging around $88 for a single share. In comparison to the price of $53 today, that's a ton of profit that we're just leaving on the table right now. So I'm going to continue to buy into this company, and in the long run, it's going to just be a money printing machine for me. Now, the second stock that I want to recommend to buy right now will be Enbridge. So this is a company that I've held for a while. It's a company that I've talked about lots, but at a quick high level, it's obviously an oil and gas company. And yes, the PE is around 19.5, so it's not drastically undervalued by any stretch. However, with the context of knowing where the global situation is at with oil and gas, I can only see prices and profits going up for a company like this. Plus, Enbridge has just been an absolute amazing company for long-term investors with their dividend. Now, their dividend is hovering around 6% right now, which is fairly high in the grand scheme of growth, but it's only going to continue to get better in my opinion. You know, they pay $2.70 annually. They've been growing over 10% for at least 5 years, and their payout ratio may seem really high at 121%, but you need to remember this is an oil gas company. They have a ton of cash coming in every single quarter, and they're going to just make you tons of money. I know we're transitioning away from oil and gas, but in the long term, it might not be something you want, but definitely in the short term, we still need oil and gas. So don't run away from this sector at this point. It's going to just make you a lot more money in the short term. Now, the third and final company that I'm going to recommend to you to buy right now is going to be AQN, or Alquin Power and Utilities Corp. If you followed my channel for some time, you'll know that this is a company that I've been very bullish on for the last while. I think they're going to be doing amazing things as they are really focused in that renewable sector. At a high level, you can see that their revenue has been increasing. They had a bit of a rocky 2021 because of some freak disasters that happened out in Texas and whatnot. As well as if you look at what all of the analysts are saying, it's pretty much across the board. Everyone is saying buy or strong buy. And right now that they're recommending an average price of around $21 for this company. Again, comparing that back to the current price of about $17, $18, that's quite a bit of profit for a very little upfront cost. And this is going to be a company that will make you a lot of money if you can just ride out this little bit of turbulence right now, especially with their ever-growing dividend, and it's been growing rapidly. So in summary, yes, things have been extremely bumpy over these last couple of months, and I don't expect them to get any better, but it's just a great opportunity for me to continue to buy into companies I already hold, dollar cost average down, which will then in the long run increase my yield when the market does eventually rebound, as this is just normal market cycles. There are a lot of different companies out there that you can look to buy that are undervalued. You know, simply comparing the PE of the market versus individual stocks is a great starting point. But if you enjoyed this video, please do like and subscribe. Thank you so much for watching, and I'll see you in the next episode.